Hi everyone, welcome back to the channel. Today we're diving into an advanced and high-risk investment vehicle, the GGBL ETF. Specifically, we're looking at the Wealth Builder Global Shares Geared Complex ETF listed on the ASX under ticker GGBL. If you're considering gearing into global equities, this one's worth understanding. What it is, how it works, the risks, and whether it could be suitable for you. Let's get into it. First off, what is GGBL? It's an ETF issued by Betashares, whose full name is Wealth Builder Global Shares Geared Complex ETF. It seeks to provide moderately geared exposure to a diversified portfolio of global equities excluding Australia. That means the fund not only invests your money, it borrows additional funds, which is gearing, and invests the combined amount into global shares. In effect, you're getting more exposure than you contribute. It invests via the Betashares Global Shares ETF, BGBL, which tracks approximately 1,300 developed market companies excluding Australia. The gearing ratio, which is the borrowed amount divided by the total assets, is targeted between 30 and 40%. This means the geared exposure, your capital plus borrowed funds, is about 143 to 167% of the fund's net asset value on any given day. In plain English, for every $100 of your money invested, the fund might invest between $143 to $167 into global equities via the borrowing. That amplifies both upside and downside. Let's break down how it works step by step. First, you invest into GGBL. The fund pools investors' money and then borrows additional funds, which is the gearing. It invests the combined amount into the underlying ETF, which is BGBL, which holds the 1,300 global companies excluding Australia. Gearing is managed internally. You as the investor don't apply for a loan or deal with margin calls. The fund handles rebalancing and adjusting to stay within the target range. Because of gearing, the portfolio's exposure is higher than your invested capital. So when global equities go up, you benefit more, and when they go down, you lose more. Here are the key facts you should know about GGBL. Its management fee and costs are 0.35% per annum of gross asset value. The units outstanding as at the 6th of November 2025 were 587,000. The net assets were 15 million, which is a relatively small fund size given it's quite new. The portfolio sector allocation is 27% in technology, 16% in financials, 11% in industrials, and 10% in consumer discretionary. The country allocation, excluding Australia, has the US at about 74%, Japan about 6%, Canada 3.3%, and the UK 3.1%. A few observations is the fund is heavily US dominated, so even though it says global ex-Australia, it's mainly US markets. It's geared, so risk and volatility will be higher than a regular global equities fund. And given the fund size is quite small with other major ETFs, this might affect liquidity or bid-ask spreads. It has a relatively low cost at 0.35% for a geared structure, which is comparable to many plain vanilla non-geared ETFs. Also worth noting, performance to date is very short, as the fund only started on the 26th of September 2025. So there's very little track record yet. Okay, so what are the main benefits and opportunities for GGBL? First is the potential for accelerated wealth creation. Because of gearing, you have magnified exposure to global equities. If global markets do well, a geared fund like this can provide higher returns compared to non-geared funds. Secondly, convenient access to gearing. If you were to gear a portfolio yourself, i.e. borrow to buy global shares, you'd need to manage loans, margins, margin calls, and perhaps higher borrowing costs. But with GGBL, it requires no loan application, no credit checks, and no possibility of margin calls, as the gearing is managed internally within the fund. Thirdly, global diversification excluding Australia. Many Australian investors are heavily exposed to the domestic market, and GGBL gives access to the developed market companies outside Australia. This is about 1,300 companies in over 20 countries. This can help broaden your portfolio, reduce local market concentration risk, and tap growth outside of Australia. In short, higher potential returns, easier access to gearing and global exposure, or packaged in an ETF wrapper. Now, with higher reward comes higher risk. So let's walk through the major risks and things you should strongly consider before investing in GGBL. First is the gearing risk. Because the fund uses borrowed money, losses are magnified just as gains are. If global equities drop, the loss on GGBL will be greater than the loss on a non-geared fund. Next is rebalancing and compounding risk. The fund targets a daily gearing exposure, but due to compounding effects and rebalancing, the returns for periods longer than a day may not simply align with the gearing multiple. This means if markets are volatile, the performance could deviate significantly from expectations. Next is market risk. The underlying portfolio is invested in global equities outside of Australia, so it's subject to all the risk of equities, economic downturns, corporate earnings misses, market sentiment swings, and sector shifts. Currency risk. Since the portfolio invests globally and returns are measured in Australian dollars, currency fluctuations matter. Liquidity and fund size risk. Because the fund is relatively new and has a relatively small size, about $15 million at the time of writing, there may be liquidity or other operational risks. The fund also does not aim to track a specific index. This means its performance may diverge and it's managed actively with regard to gearing. Now, suitability. Given all of the above, this is not a conservative core portfolio fund. It is higher risk and likely suited to investors who have a higher risk tolerance, understand gearing and its implications, have a longer investment horizon, and can withstand volatility, are comfortable with global equity risks and currency exposure. As always, this video is for educational purposes only and is not financial advice. Be sure to do your own research or talk to a professional. Thanks for watching. See you in the next one.